Hey everyone, this is Ron Finrig with CM Trading. I want to welcome you to today's presentation of RSI trading strategy. I'm really excited about doing this specific strategy because I get a lot of questions about what type of trading setups do I use for my own personal trading. So one of the ones I use is a combination RSI trading strategy, which you will all see soon. So let's get straight to it. Okay, so what we're going to cover today, we are going to discuss what is RSI, what is the relative strength index. After we go over the definition, we're going to next speak about what the RSI trading strategy is. And after we conclude understanding how the strategy works, we are going to show how to set up using this, finding the RSI trading strategy within the MetaTrader platform. Okay, so let's go straight ahead to what is RSI. So the RSI stands for Relative Strength Index. It is a index used to determine when markets are oversold and overbought. The standard formula will be that if a trading instrument is over 70, then it's considered to be overbought, and it's considered to be something's considered to be oversold when the RSI drops below 30. So once again, it's used to say when things are overbought and when things are oversold. So traders will use it when they'll see that a trading instrument is oversold, they might decide to buy it. If they just see that something's overbought, then they might decide to short it based on this 30-70 figures within the index. Okay, so does it work? Can you just buy whenever? Can you just go ahead and buy whenever the RSI drops below 30, and can you just short whenever it goes above 70? So the short answer is no, you just can't. On its own, it's not very accurate. You'll see sometimes it works, sometimes it doesn't. Why? Because if you have a range market, then it could work. But generally speaking, prices can be oversold for a very long time. So just because the index tells you that something's oversold or overbought doesn't mean that you're going to see this quick retracement. We could see situations where prices continue to be oversold for a long time. So here's an example over here. Here's a chart of the pound dollar, where we saw over here where the RSI went below 30 and it went into this oversold level. However, it continued to drop. It continued to drop another 40 pips. Additionally, we see that the RSI on this went above 70, but we had this big move in the pound dollar and it kept moving higher. So just because something gets overbought or oversold doesn't mean you're going to have a quick retracement. All the RSI tells us is based on the historical trades of the past amount of trades, the past 20 or so trades, that trading instrument is considered overbought or oversold. Okay, so knowing that using the RSI on its own is not a foolproof way of trading, because things get oversold, can continue to be oversold, and you lose a lot of money just buying whenever you think something's oversold. So what we want to do in our strategy is we're going to add moving averages. So the secret of this strategy is to also apply moving averages. For the duration of the strategy, there'll be references as MA. So we're going to add moving averages to our strategy. So what we want to do is, in addition to just looking at the RSI, we want to make sure that we're not going to want to buy just because something's oversold until the MAs, until the moving averages also tell us that momentum's on our side. So let's take a quick look at our previous chart we have here. So we see that we have this move down, we have the downward momentum, so we don't want to be buyers until this momentum stops. We don't want to be buying as the overselling is continuing. So by doing that, by using moving averages, we're going to be able to determine when the momentum is starting to stop, and then we can get into the trade. Okay, so how it works, what's the secret recipe of this trading strategy? In addition to our RSI, we want to add a 5 and a 20 period moving average. Okay, so we're going to add a 5 period moving average and a 20 period moving average. The 5 period moving average is a shorter term moving average. So that's the shorter term moving average. And the 20 period one is the longer term one. So to determine, remember we said before, we're going to look when the momentum is turning back in our favor. So when the shorter term 5 period moving average crosses above the 20 moving average, so that indicates that the momentum is changing. So that's what we're going to be looking at. We're going to be looking to buy things that are oversold, but only when the momentum is coming into our favor. It's coming back into our favor. So how does our strategy work? So then when the RSI gets oversold, when our index, when our relative strength index is telling us that a trading instrument, for example, let's say our RSI is telling us that the euro dollar is getting oversold, we're not going to be buying immediately. We don't want to buy immediately, right? We just want to, because it could continue to be more oversold. So we're going to be a little patient. We're not going to be buying immediately. We're going to wait until the selling momentum subsides and then start to buy. Once it reverses, then it's time to buy. Okay, so let's look at a chart to make this explain how this works. Okay, so here's a chart of the pound dollar on the 30-minute range. So we see over here that the RSI gets overbought and then it continues to go higher. So if you would have shorted the RSI just when it got overbought, you would have lost money as it continued to go higher, continuing to go on for like another 80 pips higher. So what we're doing is we're going to wait until the red line, which is our shorter term 5 period moving average, crosses below the green line. And that means that the momentum is shifting back in our favor. Okay, so in our strategy, we're going to be shorting the pound dollar, but we waited to short it until the momentum trades back into our favor. So we wouldn't have shorted until around the 157 level, and instead of shorting it over here at around 156.35, we were able to sell it a lot higher at 157. And that puts us in a lot better position when the momentum is now going in our favor. So we basically get in as the trade starts to develop in our favor. We're able to short it and stay short either for this, covered over here, or wait until the momentum, or our momentum subsides also. Okay, so where do we put our stop loss and take profit? So our stop loss will be when the 5 period moving average, the red line, trades back above the 20 period moving average. So let's take a look at our previous chart. So over here, if I were to put a stop loss, when this little red line over here trades back above the green line, that's when I would be getting out of the position, because that would mean that my momentum is gone away. The short-term momentum that we had has gone away, and now we want to be out of the position. So our stop loss will be when our 5 period moving average trades back above or trades back below, depending on the trade, of the green line of our 20 period moving average. That means that our momentum has gone away. Where do we put our take profit? So we're going to look for half of the retracement. So what does this mean? So if the euro dollar had fallen, if the euro dollar had gotten oversold and it had fallen 100 pips, then our target would be about 50 pips from like the lows of the trade. A couple items are very important when you trade this type of strategy, are to keep in mind other events. We want to, like, specifically, if there's economic news coming out, then the strategy may not work. You don't want to be buying. You don't want to necessarily be buying or selling right when a key news item is coming out. So, for example, if your RSI strategy tells you it's a good time to be buying the euro dollar, but the EU is going to have an important meeting in a couple hours, and maybe it's not the right time to buy it because there's going to be a lot of volatility in the market that might not make the trade work out. Also, if it's low volume, a lot of times we'll have like low volume trading during the holidays, and also because of that, when there's not a lot of volumes, then momentum doesn't usually hold very well. One third item to keep in mind is I like to use a 30-minute and 1 hour time frame. I use a 30-minute and 1 hour time frame when I'm looking for trade ideas. Okay, so very quick summary. What are we going to be doing here? We want to be buying when our RSI tells us it's oversold. We want to buy when it's oversold, but only when the selling momentum stops. So we're going to be buying, but only when the momentum goes away. Similarly, we want to be shorting when the RSI tells us it's overbought, but we're not going to short. We're going to wait until that initial buying momentum goes away and it begins to reverse. So it's a patient trade. We're using really the meat of this entire strategy is to be patient and let the trade come to us. This is a big mistake a lot of traders do in the beginning, is they chase after trades. But in this strategy, we're going to be patient and we're going to let the trades come to us. Okay. Very quickly, let's show you how you could enter the RSI and our moving averages to do this at home on the MetaTrader. So this is our MetaTrader from CM Trading. Here's the platform. Okay, to enter, you first click on the little F+ line over there. By doing that, that will bring up all the different technical indicators we have over here. We have trends, oscillators, different things over here. So I'm going to first click onto trends. This will bring up our moving average. And remember, we wanted to use a 20-period moving average. We're going to keep everything the same, but we're going to make, that's a good size. So now we have our 20-period moving average. We're going to click on there again, bring another moving average. Remember, now we're going to have our faster one, our shorter term one. We'll change the color here. So we made a 5-period moving average, and we changed our color so it's a little bit easier to see. Now let's bring that on. So now we have let's make that a little bigger for everybody to see. Now we have our red line, which is our shorter term moving average, and our green line, which is our longer term 20-period moving average. Now all we have to do is apply our RSI. So we are going to go to oscillators, because it's an oscillator index. It's basically we tell you when things are overbought or oversold. At our RSI, we're going to leave everything normal over here. And now we have our, let's make that a little bit bigger so it's easier for everybody to see. Okay. So now we have our red line, which is our short-term moving average, our green line, which is our longer-term moving average, and then we have our blue line, which is our RSI. So let's look at a possible trade example that we could have had over here. Here we saw that the RSI went under 30, so that means it was oversold. But we're not going to buy right when it gets oversold. We're going to wait until the red line over here crosses back above the green line, and we'll be buying there at around 125.57, which would have been a nice move as it traded back towards about 122.95. Okay, so once again, that's how our strategy works. We're going to be buying when the RSI tells us things are overbought or oversold, but only when the momentum trades back into our favor. And very importantly, remember, when doing this strategy, be patient and let the trade come to you. This is probably the difference between success and failure for new traders, is being whether you're patient or not in your trades. Okay, thanks for watching, everybody. And if you have any questions about this program, about this presentation, or any other trading strategies, feel free to email us at dealing@cmtrading.com, or you can send me a note at Ron Finberg on Twitter. You can hit me up at Twitter at Ron Finberg. I'll be happy to answer any questions over there. Want to wish you a wonderful day and good luck with all your trading.